funder. The contents of this webinar was developed under grant H421F240198 from the U.S. Department of Education. The department does not mandate or prescribe practices, models, or other activities described or discussed in this document. The contents of the webinar may contain examples of adaptations of and links to resources created and maintained by another public or private organization. The department does not control or guarantee the accuracy, relevance, timeliness, or completeness of this outside information. The content of this webinar does not necessarily represent the policy of the department. This publication is not intended to represent the views or policy or be endorsed by any of the views expressed or materials provided by any federal agency.
Thank you, everybody, for being here. It's fun to see all the states are being represented. If you've been attending our sessions, today's session is session 3, and this is an introduction to self-employment. And today we are in the SSI house. So we're going to talk about self-employment rules for SSI. So welcome. As was mentioned, the Q&A box are for questions. If you can try to make complete questions, that way we're understanding your question as best as we can. If you're not familiar with us, we are from the Work Incentive Support Center. We provide training, credentialing, and support to practitioners in the field of work incentive planning. The WISC team is housed at the Yang Tan Institute. And we are part of Cornell University's ILR school. I am here today. My name is Aleda Taruno. I am here with my colleague and friend, Deborah Wagner. This is our team that helps put our presentation materials together and who also run our YTI online website. This message was read to you, so you don't have to read it again. I'm not going to take time to read it. But I do want to give a special thank you to NDI for their leadership in managing this grant and for hosting us today. All right, so what are we going to talk about today? We're going to talk about SSI work incentives for people who are self-employed. And we're going to also talk about the using PASS, the Plan to Achieve Self-Support, to support self-employment. PASS is one of my favorite work incentives, so I'm excited to be talking about it today. And then Deborah will be here to talk about resources for self-employment. She's going to talk about the Achieving a Better Life Experience or ABLE account and Property Essential to Self-Support or PES. So we have a lot to talk about today. We are going to cover a lot, and so we're going to take it step by step. So let's get started by talking about SSI work incentives for self-employment. So as many of you probably already know, SSI is a needs-based program. It provides a monthly benefit that pays essentially only for food and shelter. It's not very much money because the amount that folks receive has not kept up with the cost of what items really cost. Right? The current federal benefit rate is $9.94. That's for 2026. That's for the benefit amount for a single individual. And then it's a little bit higher, $14.91 for a couple. When it comes to working, Social Security wants to know all the income coming in. SSA reduces the SSI payment amount if the person has other income, whether it's income from other means other than work, and of course, it includes net earnings from self-employment or NESI. To calculate a person's monthly SSI payment, we're going to introduce you, if you have not already seen this, the SSI calculation worksheet, which we specifically created for folks that are self-employed. And what you'll see is that you're going to include the monthly NESI in the first line of step 2, all right? And then there's wonderful deductions and that you'll be able to see in that calculation. To calculate total countable earned income, you're going to subtract deductions and exclusions from the first line of step 2. So I'm just going to give you a general overview of what you're seeing in this calculation. But first, you can use this SSI calculation worksheet for self-employment to estimate the monthly SSI payment. Now, we do have an interactive web version at this website, which is ytionline.org/SSI calculation worksheet. That one in step 2 and 5 of the web version include the NESI in gross earned income. Now, as you can see in this calculations, there are a total of 5 steps. Step 1, you're calculating the countable unearned income, and there's a general income exclusion of $20. In step 2, as I mentioned, you enter the first step, net earnings from self-employment, and any other gross earnings. If people have 2 jobs, that's possible. And then there's these wonderful exclusions that we're going to talk about in the next slide. The student earned income exclusion, I mentioned the GIE. There's also the earned income exclusion, or EIE. There is something called impairment related work expenses. And then what remains after that, you divide by 2. And then there's a very generous work incentive for people who are considered blind by Social Security standards, and that is the blind work expense. All those exclusions will get you to your countable earned income. Step 3, you're counting all the money, all the countable unearned income, all the countable earned income, and there's a past deduction. If somebody is saving money in a past plan, which we will talk about today, you would add that exclusion here. In other words, Social Security is going to exclude that from the calculation to reach the total countable income. Finally, in step 4, you'll deduct total countable income from the federal FBR that pertains to the particular individual who is the beneficiary of SSI. And then in step 5, you get to tell people their financial outcome, right? What they're getting in SSI, what they're getting in from their net earnings and any gross unearned income, and then any deductions that they have to consider each month, such as PASS, blind work expenses, and IRWIs. And then they get to understand their total financial outcome for the month. All this to say that it's not a dollar for dollar reduction, as you can see, right? There's a lot of exclusions in step 2 from earnings. So it's, and because of that, people who are on SSI will always be better off working than not working, because they may be able to keep not only all their unearned income and some of their earnings, right? All of their earnings, but they'll also be able to keep some of their SSI payments. All right, so let's look at SSI work incentives that you deduct from net earnings from self-employment. Again, this is what you just saw in that calculation sheet. The first work incentive is the student earned income exclusion, or the SEIE. This is a really amazing work incentive for individuals under the age of 22 who regularly attend school. Social Security allows students who qualify to exclude from earnings up to $2,410 a month. So if someone has a part-time job, summer job, they can exclude up to $2,410 of earnings each month. There is an annual maximum of $9,730. And in order to be a student, regular attending school, they have to be in a coursework for at least 12 hours. There are exceptions to that. We're not going to go over the exceptions today. And then there's the general income exclusion. If it's not applied in step 1 of that calculation sheet, you apply the $20 general income exclusion in step 2. And then there's the earned income exclusion of $65. The first $65 of earnings can be deducted. And then there's impairment related work expenses. So IRWIs are a worker's out-of-pocket costs that they need to be able to work that's related to their impairment. It has to be paid by the worker. If it's paid for by Medicare or Medicaid or maybe waiver services, it's not going to count as an impairment-related work expense. If the worker pays for it himself, then it could be counted as an expense, as an impairment-related work expense. Some examples of IRWIs could be monthly medication costs or quarterly medication costs, attendant care services, When it comes to self-employment, expenses that are used in tax returns can't be used as IRWIs as well. So just keep that in mind. The next exclusion is the earned income exclusion of 1/2 the remainder after the above listed deductions. So half of the remainder is not going to be counted as part of income. And then there's a very generous work incentive for folks that are considered blind by Social Security standards. The blind work expenses are for blind individuals on SSI, and it is only an SSI work incentive. And basically, it allows, similar to IRWI's, deductions, but it's deductions that are ordinary and necessary expenses that are attributable to the earning of income. So it's a broader category. It can include taxes that are paid by the worker. It can include dependent care costs paid for by the worker. It's a very generous work expense. Work incentive. And of course, we're going to talk about the the plan to achieve self-support, or the PASS deduction. But that is also another exclusion. If someone is saving money in their PASS plan, that amount of money is not included as part of earnings in that calculation sheet. All right, Deborah, are there any questions we need to address at the moment?
No, Alida, thank you.
All right. So let's talk about the PASS plan and how to use the PASS to support self-employment. All right. The PASS plan is a work incentive, and a person can use a PASS to set aside income other than SSI and or resources to be used to achieve a specific work goal. So they can set aside earnings from work. They can set aside unearned income. For example, if they receive Title II benefits as well, or maybe those CDB benefits, they can use that to fund their PASS plan. If they have an inheritance or some kind of windfall settlement, they can use that money to support their PASS funding. And the PASS has to be used to achieve a specific work goal. And the thing about a PASS, it can be established to cover the cost of many things needed to make that work goal a reality. It could be education. So maybe somebody needs to take, for example, some business courses, or somebody wants to take get an AA degree, right, and receive a business degree to help them run their business. It could be vocational training in order to run a plumbing business or an electricity business of some kind. They would need to go to a vocational training program. They can use the PASS to fund that training or education. Starting a business. Maybe you want to open up an online store, maybe a brick and mortar store. So it could be used to start a business. Support services. If someone needs to fund services to help them run their business, or a job coach to do their job, they can use a PASS plan to fund that. And really, for a PASS plan, the options are almost limitless. You have to take a look at what that goal is. And I always used to say to my clients, think about everything you need in order to be able to achieve this goal, even if it seems, out of the ordinary. Let's see what we can come up with. Okay, so how to apply for PASS? So PASS is an application process. It has to be submitted and it has to be approved. The form that Social Security uses is SSA Form 545BK. It can be found online using a Google search. Once the application is completed, you submit the form to the local PASS specialist. So there is a PASS person. So you want to find your local specialist using Social Security's location of PASS cadres, which is on the Social Security webpage. You should be able to find those websites through the links that are here in the PowerPoint. Now, the PASS specialists I've worked really closely with some of them, and they are very versed in PASS. So if you have questions, they're a great place to go to and ask questions about PASS plans. If you don't already get SSI, and if the PASS specialist you're working with believes that you'll likely get this PASS approved, they will tell you to submit an SSI application. So, for example, if you're receiving Title II benefits only, and you want to pass and you want to put those Title II monies into your pass, the pass specialist will let you know when to submit your SSI application. All right. And they don't go through a disability review. It's basically to see if you meet the SSI resources. They're able to adopt the disability determination that's already been made by Title II. So ultimately, the PASS specialist approves the application, right? And then they issue a notice telling you what's been approved, what items you're able to purchase with your PASS funding. Now, if a PASS application has a work goal of starting a business, you do have to submit a business plan with the application. There's no way around that. That has to be done. I think having a business is a good thing because you are going to need it for any kind of funding that you're going to try to go after, right? So we have some resources for you to help you with developing a business plan. First, there's a Service Corps of Retired Executives, or SCORE, as people know it. They can pair a PASS applicant with a mentor for free to help them develop a business plan. Very, very helpful. The mentor can also help with other planning and tasks related to starting a business. There's also the Small Business Administration, or SBA. They have a lot of free resources and assistance on their website. If you haven't checked it out, please check it out. It's a really great site, and it has a lot of free resources to help develop a business plan. All right. So remember, if you do want a PASS plan, you will have to submit the business plan with the PASS application. Okay. So one thing that's really important is that when you are saving money and putting it into a PASS savings account, um, you've got to make sure to keep that money separate from other monies. So after the PASS application is approved, the applicant must set up a bank account to save the PASS funds. So each month, you have committed to put money into that fund. It's possible that you have a resource that you're starting with, so that would go into your PASS account. It could be any account from any bank that you tell the PASS specialist, this is the account that I'll be using to put my PASS money in. So you're going to deposit resources or income into the PASS bank account. You don't want to put other funds in the PASS bank account. You want to use money that's in the PASS bank account only to pay for those goods and services approved in the PASS application. The PASS specialist will send a letter, as I indicated earlier, and it will outline the items that have been approved for you to purchase with your PASS funding. And at some point, an accounting will be done so that the PASS specialist can see that you are spending that money that you're putting into the PASS account on the things that have been pre-approved in that letter that was sent by the PASS specialist. And maybe you forgot something, an item or something in that PASS application. You always want to communicate with the PASS specialist if there is an item that wasn't thought of originally that came up. They always seem to be very flexible. They want to make sure that an approved PASS is successful, so they will try to work with you to make sure that those items get approved. All right, let's go ahead and take a look at a PASS example. All right, so this is Jaden, and Jaden gets $857 per month in childhood disability benefits, or CDB, and $130 per month in SSI. Now, in this example, we are using the Last year's FBR rate, 2025, which is $967. So those of you who are math geniuses and are looking at this and doesn't seem right, that's because we're using 967, the 2025 FBR rate. So Jaden paints as a hobby and wants to start a business to sell his paintings online and in galleries. That would be awesome, right? Now, he worked with SCORE, a mentor, to develop a business plan. Great. They are such a great resource. Jaden submitted a pass application to save $20,000. He wants to use the $20,000 to purchase paint supplies and to pay someone to help develop his website. And his pass plan is approved. So Jaden commits to save $837 per month from his CDB. Each month, he's going to take that CDB and put it into his savings account that he has designated as his pass account. Now, he's going to keep $20 per month from his CDB, and his SSI payment is now going to increase to the full amount, $967. So he can still have money to pay his living expenses. Okay, again, we're using the 967 2025 FBR rate. All right, so what this allows Jaden to do is to save his CDB while also raising that SSI benefit amount he receives each month. It's really a win-win situation, right? State VR pays for Jaden to attend a local art school for 2 years. At the end of the 2 years, Jaden has saved in his pass plan just a little over $20,000 to start his business. That's not a bad start when you're starting a business. So one thing is for sure is that a pass plan takes planning, right? So he's got a 2-year period of time to save. And so it takes planning when you use a pass plan. One quick thing I may not have mentioned that the pass, because it is a pass plan that was approved, that $2,000 resource, you're bypassing that $2,000 resource limit that SSI has. That's the point of the pass plan. Before there were ABLE accounts, there was pass plan. So again, we'll talk about ABLE accounts in a few minutes. Now, as I said, the pass application can be found online, but I also wanted to make you aware of this other resource. This website was created by the Yang Tan Institute, and it's passonline.org. It helps people understand and apply for a pass. And what I mean by that is if you go in there, you can create credentials and fill out a pass application that you can ultimately print. But the beauty of it is that you can also save it and share your credentials with anybody you want to take a look at that pass plan. So I actually was introduced to the pass online by the pass specialist that I worked with and said, I use this so that we can share the pass application back and forth. We can both view it, right? And so this was really helpful during COVID so that we can just communicate about the pass application that was being developed here. You could do it the old-fashioned way and send it to the pass specialist and kind of go back and forth about it, each having a copy. But this sort of saves time because everyone that you give credentials to look at what you're filling out in here can take a look at it and provide input directly into the document. All right. Any questions about what we've talked about so far?
Yeah, Aleda. So they said that it seems like the scenario that we use skipped over cost of living expenses while putting aside their monthly income. And Aleda actually told you that none of the money in the past would count. And so the person would get SSI of $967 to make up for the money being saved in the pass account. So in Jaden's example, Jaden has the exact same amount of money each month to pay living expenses while also being able to save all of that money from their childhood disability benefits. So does the money in a pass account count towards the resource limit for state medical? It shouldn't.
It
Money saved in
shouldn't.
the past should not count for any of these needs-based programs.
Right.
Somebody's asking how this applies to SSDI, Aleda. Do you want to answer that one?
Sure, yes. And so we gave you the example of Jaden who was saving his CDB. You can cross out CDB and put SSDI, and it's the same scenario. So CDB, SSDI, those are both Title II benefits. So yes, so the example we used was CDB, but it could be an SSDI or DIB as the exact wording that Social Security would use, disability insurance benefits. Now, is there a yeah, let me answer this question. Is there a penalty if someone doesn't succeed in their PASS plan? There's no penalty if someone is not able to fulfill their business goal. Jaden could certainly try, has the resources, but perhaps he's not making end way at some point. It's possible that he may not succeed. That's a reality in today's world. There's a lot of businesses that maybe start off well and maybe don't succeed, or maybe he didn't succeed, but there is no penalty if the business does not succeed.
However, if he has money left over in the pass account, he might have to return those funds, correct?
So again, the PASS plan allows someone to on that 2,000 resource limit. It's the loophole or the exception to the rule. If somebody wants to save money to start a business, the PASS plan is a way to do it. They don't have to worry about that $2,000 resource limit. And you can save for startup costs. What startup costs will depend on the business that the person is starting. If it's an online business, they might need to work with a web developer to develop that website. They may need to buy products to in order to create the product, like Jaden had to, in order to sell that product. So it will all depend on what the business is.
All right, Aleda, that's it. That's all I see for questions in the Q&A box. So I will hand it over to you and let you cover the Q&A box.
Okay.
And I'm going to start talking about resources for self-employment. A number of you have been hinting at the fact that SSI absolutely has a resource limit. That limit is $2,000 for an individual and $3,000 for couples. We're going to talk about some tools that people can use when they're on SSI to not count those business resources. So again, the SSI resource limit is $2,000 for an individual. For an SSI couple, their resource limit is $3,000. Those amounts have not changed since 1989, so they definitely have not kept up with inflation. But if an individual has more resources than their SSI resource limit, they are ineligible for an SSI payment until they reduce their resources back down to the limit or below. And if they go for 12 months over the resource limit, at that point, Social Security will terminate their SSI, meaning if they need SSI again in the future, they would have to file a new application. So for people who want to start their own business, this presents a challenge. Many people who want to start a business need to save money to start and run their business. So these resource limits can be a barrier for those people on SSI who want to start a business. So we're going to talk about some tools that you can use to get around this resource limit issue. Now, Aleda already told you about the Plan to Achieve Self-Support or PASS, which not only protects the income that you're setting aside, but it also protects resources that you need to start your business. So Aleda told you about Jaden and how Jaden used a PASS to save $20,000. That money does not count as a resource for SSI as long as it's in the designated PASS account and Jaden's using it towards those business expenses as approved in that PASS plan. Jaden doesn't have to worry about that money counting as a resource. So that was a great way for Jaden to be able to save $20,000 without having to worry about that $2,000 resource limit. Now I'm going to tell you about two other tools that people can use. The first one is called Achieving a Better Life Experience or ABLE account, and I'll talk about that next. And the other is a program called Property Essential to Self-Support, or PES. And we're going to talk about that after we talk about the ABLE accounts. So let's start with achieving a better life experience accounts, or ABLE accounts. These allow people with disabilities to save towards qualified disability expenses, and I'm going to tell you all about it now. So this is a tax-advantaged account that allows you to save funds to pay for disability-related expenses of someone called the designated beneficiary. So these accounts are not accounts that you can just go in and set up at a bank. Remember, Aleda said you could walk into a bank and open an account and say, this is my pass account, and you give Social Security the account number. That's not how ABLE accounts work. You actually establish these accounts through a state agency, or the state contracts with a private company to maintain these accounts. So I'm in Ohio, and the Ohio State Treasurer's Office is the one that maintains these ABLE accounts. Now, an eligible individual can open an ABLE account through the ABLE program in any state if it's a national program. So some states have a national program. You can use that account no matter where you live in the country. There are a few states that have ABLE accounts only for people who live in that state. Now, you may have thought in the past that you couldn't use an ABLE account because you didn't have a disability that started before age 26. Well, there's good news. Starting on January 1st of this year, that age limit was increased. And so now, in order to open an ABLE account, you must have a disability that started before age 46. That means a lot more people are eligible to use ABLE accounts. Now, you don't have to open the ABLE account before you turn 46. You can open it after your 46th birthday. You would just need evidence that you had a disability that started before age 46. So maybe you were getting a Social Security disability benefit before age 46, or maybe you have medical records showing that you had a disabling condition before age 46. Either way is fine. So before you open an ABLE account, I encourage you to look at the state rules for the state where you plan to open your account. You want to understand those state rules and how their ABLE account operates. If a person is on SSI and they deposit their own income into an ABLE account, that income still impacts their SSI payment. So if I take $50 a month from my paycheck and I put it into my ABLE account, that $50 is still going to be used on that SSI calculation sheet that Aleda showed you, and it's going to reduce the amount of my SSI payment. Okay? So the designated beneficiary, the person who owns and manages this account, can be anyone who meets the Social Security disability definition, but they don't have to be getting a Social Security disability benefit. So I've worked with a lot of transition age youth, and they've been able to open their ABLE account before they even apply for their disability benefits. They can start saving ahead of time. Now let's talk about who can make contributions to an ABLE account. And the rules say that any person can contribute. That includes the designated beneficiary. I could put money into my own ABLE account, but it also could include a trust or an estate. So let's say I were on SSI and I were going to inherit $10,000 after my aunt passed away. Well, if I got $10,000 generally, that would put me over the resource limit for SSI, right? That would be a problem. But if that money is put into my ABLE account by the estate, then it's not going to impact my SSI. Now, there is a deposit limit. So the combined deposits from all sources, and this slide has a typo. This has last year's number on it. The amount is $20,000 per year. So this goes up a little bit each year. And in 2026, the maximum you can deposit in a year is $20,000. However, if the designated beneficiary is working they can deposit an additional amount from their wages, up to $15,650 this year. So that could include self-employment income could be put into the ABLE account. Now, that income is still going to count as income and could impact the amount of my SSI payment in the month that I receive the income, but the money I save in the ABLE account will not count as a resource. So I said that the money in the ABLE account could be used for qualified disability expenses. What is that? So this is an expense related to the disability or blindness of the designated beneficiary. And it includes a lot of different types of expenses: education, housing, transportation, employment services, training and support. It could include assisted technology and related services, health, prevention and wellness services, financial management, administrative services and legal fees, expenses for the ABLE account itself. So if your ABLE account charges fees on your investments, those could be covered by the money in the ABLE account, and basic living expenses. So this is very, very broad. And I'll tell you, in the decade that we've had ABLE accounts, I have never seen the IRS do an audit to see if somebody misused the money on something that didn't qualify as a qualified disability expense. So a lot of different things that people can use this money for. Now, I want to talk about how SSI treats contributions and earnings in an ABLE account. So if you're the designated beneficiary and you contribute to the ABLE account from your wages, from your self-employment income, it's going to reduce your countable income, okay? So if Andrew works and earns $500 that he puts into an ABLE account, that $500 will still be used to reduce his SSI payment due to the SSI work rules. And Aleda told you about those. So they could disregard the $20 general income exclusion and the $65 earned income exclusion and the half the remainder earned income exclusion. But then the remaining countable earned income would reduce the amount of Andrew's SSI payment. Third-party contributions. If somebody other than Andrew puts money into the ABLE account, it is excluded and does not impact his SSI. So if Andrew's mother deposited $500 into his ABLE account, the SSI program will not count that $500 as unearned income for Andrew. So it will not reduce the amount of his SSI payment. And finally, you can actually invest money in an ABLE account. Depending on the state you're in and the investment options they have, you might invest that money in a way that you're going to earn some interest or some dividends. And that money that you earn on your ABLE account investments does not count as income for SSI. So if Andrew used his ABLE investment option to buy mutual funds, SSI would not count the dividends from those mutual funds as being income to Andrew. So let's talk now about how ABLE accounts help with the SSI resource limit. And this is the magic of the ABLE account. They are going to exclude the first $100,000 in an ABLE account from counting as a resource. Now, if the account balance goes over $100,000, SSI will count the excess amount, the amount over $100,000, and they'll combine that with any other resources you have and look to see if you're over that $2,000 resource limit. If you do go over the $2,000 resource limit because of excess funds in an ABLE account, Social Security will suspend your SSI payments indefinitely. And anytime you bring your resources back down, then you will be able to get an SSI payment again. pretty good deal that you can save money like this and not have it count for SSI until you go over $100,000. When these accounts first started, I used to explain them to clients and they'd say, "Oh, why bother?" I'd say, "It's super easy to set one up, super fast, super easy." And they'd be like, "What's the point?" And I would say, "Would you rather have $2,000 in the bank or $100,000 in the bank?" I don't know about you, but I'd rather have $100,000 in the bank, right? That made it an easy decision. Now, there are lifetime maximum deposit limits, a maximum amount you can have in your ABLE account, and it is tied to your state's 529 education plan limit. So whatever your state's limit is for 529 education plans, that is also the limit for your ABLE accounts. One thing to note is that in many states, if an ABLE account holder dies and there's money in the ABLE account, Medicaid might be able to take some of that money. Now, there are 9 states that have said no, Medicaid cannot take the money that's left over in the ABLE account. Again, each state has their own specific rules, and that's part of why I said to check those state rules when you're opening your ABLE accounts. So, how could ABLE accounts help support somebody who wants to start their own business? Well, the designated beneficiary can save their own money in the ABLE account to start the business and to cover living expenses before the business starts turning a profit. But third parties can also contribute to an ABLE account to help the designated beneficiary either start their business or to help them pay their living expenses before their business starts to turn a profit. So for example, if I wanted to start a business and I were on SSI, and Aleda, she's my good friend, she wants to help me out. She says, "Deborah, I want to give you $5,000 to help you start your business." Well, if she just gave me $5,000 directly, it would impact my SSI payment and I'd be over the resource limit, right? But if Aleda put that money into my ABLE account for me, then I would have that $5,000 to spend while I'm starting my business and it wouldn't impact my SSI. Now, some people say, well, should I do an ABLE account or should I do a PASS? And it really depends on your situation. But the benefit of the PASS account is that the money that I earn, that I set aside in my PASS account, doesn't count as income for SSI. But if I earned that same money from working or from another benefit I had, and I put it into my ABLE account, it would still count as income and it would reduce the amount of my SSI payment. So if I'm going to self-fund my business, a PASS account has a real advantage because it gives me more money from SSI to help pay my living expenses while I'm saving towards my work goal. ABLE accounts don't do that. If I put my own income into my ABLE account, it's still going to reduce the amount of my SSI payment. Now, it doesn't count as a resource, which is great, but it still counts as income when I earn it. Okay? Aleda, were there questions about ABLE accounts that we need to talk about?
No.
Thank you for taking care of the Q&A box for me. I appreciate you. All right, let's talk about another great tool for people who are self-employed. This is called Property Essential to Self-Support, or PES. I know that's confusing. PASS and PES, they're so close. But this is Property Essential to Self-Support, and this allows Social Security to not count some resources related to self-employment. So Social Security doesn't count some property as a resource if it's necessary for self-support. So it can include the following types of property: property used in a trade or business. So if I'm working as a machinist and I have to have all my own machining tools, those tools are probably worth a lot of money, more than $2,000, definitely. but they wouldn't count if I was using those tools for self-support. If I were running a business as a plumber, maybe I would not only have all those tools, but maybe I have a van that I'm using to get to and from jobs as a plumber. Maybe I have all kinds of stock that I have for different parts that I might need to replace. Then none of that would count because I'd be using it in my trade or business. The other type of property that doesn't count is a property that represents a government authority to engage in an income producing activity. So if I'm blind and I have a license to stock all of the vending machines at the federal government building downtown, that is a valuable license that I own. But it's not going to count as a resource because Social Security will consider it property essential to self-support, or PES. So this is really important because when you have your own business, when you're self-employed, you might need to maintain stock and supplies that you need to operate your business. And PES allows you to maintain more than $2,000 in those resources without having any impact on your SSI eligibility. So you can have that van that you use in your plumbing business and all the tools and all of the replacement parts and pipes and fittings and things that you have, and none of it's going to count when they're looking at the $2,000 resource limit. So let's look at an example of how somebody used these tools in order to start their business and run their business. So we're going to look at an example for Tracy. So Tracy loves old books. They go to flea markets and they know all of the best sites online to find first edition and other rare books. Tracy decides to start buying rare old books and selling them for a profit. So something that maybe Tracy's been doing as a hobby, they're going to turn into a business, right? So they use their ABLE account to save money to begin to buy books. And their friends and family members contribute to their ABLE account to help Tracy start the business. Gifts to the ABLE account do not count as income for Tracy's SSI, and the money in the ABLE account is less than $100,000, so it's not going to impact the resource rules for SSI. This is a great deal. The books that Tracy buys and stores as inventory is property essential to self-support, so it's not going to count as an SSI resource. And when Tracy starts selling the books and earning income, please remember that Tracy needs to report that net earnings from self-employment to Social Security because their business is up and running, they're making money, and they're going to have to report that income to Social Security. Aleda, do we have questions about property essential to self-support or any of the
Yeah,
other
we actually have
resource
some.
tools?
Yeah, we have some good questions about pests. Can a bank account under a business name be considered pests?
So this is where it gets complicated. It's going to depend on how you created your business. So if it's your name is on the bank account as the only owner of this business, yeah, it could be property essential to self-support. But if I've created a corporation and I have a bank account under the corporation's name, that's not technically my resource. So it's not excluded as PES. It's a corporate asset. It's not my asset. So that's where talking to an expert about how to set up your business is really important. But if the bank account's going to be in my name doing business as Tracy's Books and Things, then I'm going to have to be to provide evidence that that's property essential to self-support. So yeah, that income could be, but it's got to be tied to the business. So I've got to need that property to pay for inventory, to pay for stock, to pay for things related to the business.
Do you need to apply for pests like you do like a pass plan?
Great question. And no, you don't apply for it, but when you're reporting your resources to Social Security, every so often they do a redetermination, right? They bring you in and they say, what's this money sitting in this bank account? Or tell me about things that you've bought in the past year. And if I tell them I have a new van, they might say, oh, wait a minute, that's going to count as a resource. You've got a second vehicle. But if I tell them that I'm using it in my plumbing business, then they can apply the property essential to self-support rules to exclude it. So you don't do an application, but when you're reporting those resources to Social Security, you have to be clear that it should not count because it's money or resources that you need to support your business.
Yeah. And are there any age limits for using PESS, sorry, PESS?
It is confusing. No, there is no age limit for property essential to self-support. So maybe you've got a young person who's on SSI and they're going to start a business mowing lawns during the summer, and maybe they acquire some equipment that they're going to use in this business. That could be property essential to self-support, and it wouldn't count when they're looking at resources for their SSI.
Okay. And that is what we have for now. Thank you.
Okay. Somebody asked if there's a form required to report pests, and there's not. It's just when you're talking to them about your resources, you're clear that it's property essential to self-support. Okay. All right. I am going to do the summary of the topics that we've gone over today about SSI and self-employment. And then I'm going to look to see with Aleida if there are any other questions that you've asked related to the topics that we've covered today. So the first thing I really want to tell you is that when people are on SSI, they are always better off when they go to work. They will always have more money when they work. That includes people who are self-employed. And that's because Social Security counts less than half of your earned income, that net earnings from self-employment, they're going to count less than half. So as your income goes up, your SSI goes down, but it goes down very slowly, right? Because they're only counting half of the money that you earn, less than half. You can use all of the traditional SSI work incentives to help self-employed workers keep more SSI as their net earnings from self-employment goes up. So as Aleida told you, you can use that student earned income exclusion. And we've got the general income exclusion of $20 and the earned income exclusion of $65 and one half the remainder. You can deduct the value of impairment related work expenses and blind work expenses and any of that income that you're using to fund your plan to achieve self-support or pass. So those tools can help reduce that countable income and maximize the amount of that SSI payment. Now, the plan to achieve self-support or pass can help people who get SSI to save income or resources that they need to start a business without impacting their SSI eligibility. So any income that they're saving in the past doesn't count as income for SSI, and the resources that they have saved in that account do not count when they're looking at the resource limit for SSI. So pass accounts can be used to protect both income and resources for people on SSI. Remember, the pass has to be for a specific work goal, but I've helped a lot of people use a pass to be able to start their own business. And for a lot of people with disabilities, it's a great way to save to start that business. Now, achieving a better life experience or ABLE accounts allow people who get SSI to save to start a business, among other things. They can even get help from their friends and family. They can contribute money to the ABLE account to help them to start their business. And remember, SSI does not count $100,000 saved in an ABLE account. So that's a really powerful savings tool. And then property essential to self-support excludes business resources for self-employed workers on SSI. So without PES, it would be really hard for someone on SSI to save the money they need to start a business, to buy the goods that they need to start their business, right? But PES allows them to exclude those resources and it doesn't impact their SSI. So at this point, I am going to stop sharing my screen and
We do have a couple of questions to address.
good.
So, great questions. When you speak with Social Security about resources that are potentially PES, do you have to remember that term, or can you just say, I use this for my business?
In a perfect world, you can just say, I just use this for my business. But sometimes with Social Security, it helps to know the magic words. So now that you've had this training, I would call it, this is property essential to self-support. I use this in my business. And you can tell them, this is the van that I use to drive to people's houses to fix their plumbing. These are the tools I use when I work as a plumber. This is my supply of pipes and other equipment that I need to work as a plumber to help them understand why none of that should count.
All right, and here's a great question too. Any tips to discuss pests with a business advisor and mentor? They're not usually versed in Social Security language, so they might not understand about this provision.
Well, I mean, you could certainly educate them. Then they could help the next person who's on SSI that they work with as a business advisor. But it's not important for them to know because it's not related to the operations of the business. It's important for the person on SSI to know when they're reporting those resources to Social Security. They have to know that term. Your accountant doesn't need to know that it's pests, right? But they do need to label it as business property. That will then help you when you're talking to Social Security about why it shouldn't count as a resource.
All right, and then there was a question, some questions left over about ABLE. Um, Most of the folks were asking about that payback provision. Do you have to, if you're not currently enrolled in Medicaid, does the payback provision of the ABLE account still apply?
No, because all Medicaid is doing is trying to collect back the money that they spent on the designated beneficiary's medical expenses. So they're recouping the money that they spent on this person. If that person never used Medicaid, they never spent money on them, so there's no money for them to take back. Some states allow people to roll over the money in an ABLE account from one designated beneficiary to a family member who also qualifies as a designated beneficiary. So if I had two children on SSI and one of them passed away, I could roll the funds from their ABLE account over into their siblings' ABLE account. And that would then leave nothing for Medicaid to take back in my state. But those are the types of questions to ask when you're looking at setting up an ABLE account in a state, is figure out how their Medicaid payback works, if they even have Medicaid payback in that state.
Okay, and then there's a question. Do you have to be self-employed to use PES?
Great question. You don't have to be self-employed. So I certainly have worked with some clients who were tradespeople and they had to have their tools and their equipment even when they worked for somebody else. And that could be excluded as property essential to self-support. So if instead of owning my own plumbing business, I worked for Aleda's plumbing company, but she still required me to have my own tools and equipment that I took to my job, then that could be excluded as property essential to self-support. Great questions.
Yeah.
All right, so let's talk about the SSI resource limit. So when I say it's $2,000 for an individual, that means only one person eligible for SSI. To be an SSI couple, they have to both be eligible for SSI. So if two people who are eligible for SSI live together and hold themselves out as being married, they are an SSI couple. and their resource limit is $3,000 for the two of them. Their combined resources cannot be more than $3,000. If I were on SSI and I got married to somebody not on SSI, then there's a whole process where they would deem or count some of that person's resources as if they were my resources, even if they're not in my name. So that's a whole nother set of rules.
And that's it. Oh my gosh, I can't believe we covered all the questions. There were a lot of great questions.
Absolutely. Anything else you wanted to add, Aleda?
No, I was too busy answering questions, so think right now.
Nikki, was there anything you wanted to add?
No, I just want to add that I am so impressed. I mean, there are 82 answered questions in that Q&A box. So just a reminder to everybody, if you did ask a question and we didn't get to it, then you will get these answers. It'll take a little bit because obviously there's 5 weeks and just today there were 82 questions. So, we will be compiling sort of an FAQ and getting Deborah and Aleda and also Ray to answer those questions, and we'll get them out to you down the road. A reminder, if you are going to miss and you want credit, then you do need to watch the recording. There's been a few questions about, do I have to, register? You've registered once for this whole course. So if you're registered for the whole course, you don't have to register again. You only have to register again if you're going to watch a recording. And then every recording has its own registration for that particular recording, which we just need to know that you have watched that in order to get credit if you're asking for credit, CRCs or CEUs. Okay, there's more, there's more questions coming in now. Can a second home be used for pests?
It'd have to be essential for self-support. So if I owned another house on my street and that's where I operated my business, I'm selling secondhand clothing and that business is that building is used for that business, then it could be property essential to self-support.
Oh, and what about rental properties? Are those self-employment?
So this is always a hard one with Social Security. So if you own and manage rental properties, it really depends on how you're doing it. So let's say I live in a duplex, right? And I live in one of the units and I just rent the other unit. I'm probably not engaged in the business of being self-employed, right? I probably have a day job. I'm just bringing in a little bit of extra income, helping pay my mortgage, right? But now, if I own an apartment building with 4 units and I'm providing all kinds of support and I'm running it, maybe I own a couple of buildings, maybe I own 5 buildings, right? It's a magnitude of scale. So, the more that you own and the more you're involved in supporting yourself through operating those properties, the more likely Social Security is to consider that self-employment. And remember, for SSI, they treat self-employment much kinder than they treat unearned income. So if I'm just getting some money from rent and it's not my business, it's going to significantly reduce my SSI. But if I'm running a business and it's net earnings from self-employment, then they're going to count less than half of that money when they calculate my SSI payment. So I really recommend, if somebody's thinking about doing rental property as their self-employment, that they talk with a work incentive planner who can look at those rules around rental property and help them understand where they would tip from unearned income into the earned income world.
Okay, fabulous. We do have a few minutes left, so I was just, oh, you already answered that question. I was going to say, Aleda, I'm not really sure how to even ask that question that was in there. I was confused, so I'm glad you just answered it. Okay, all right. A reminder that if you look back through the chat, you will find that link to go to both download the PowerPoints for each session. And if you scroll down, all of the recordings are there, each one listed separately. There's been a lot of questions about where's the link? How do I find the recordings? The link has been posted several times into the chat and into the Q&A. So that
And
should
I
be good.
also, I'm sorry, Nikki, I also put
Yeah.
a link for the Pass Online website that we talked about in the chat box. So if you didn't see that and you wanted that link, that's also available to everybody in the chat box.
Okay. All right. All right. Okie dokie. I think then that looks like it's it. If you have questions, you can certainly put them in and we will get to them, like I said, and send them out in probably about 3 weeks because it'll take a while. And so thank you, ladies, so much. Again, I'm so impressed with the question answering there. That's fantastic. And hopefully everybody will join us again on Thursday for the next session. Which remind me, Deborah, what is the next session on?
So on Thursday, we'll talk about what happens to your health care when you're self-employed. So we'll look at things like Medicaid and Medicare and the Affordable Care Act marketplace and talk about ways to keep that medical coverage because it's fine, well, and good if you're going to make a lot of money, but you got to have health coverage too, right? So we'll talk about how to keep that on Thursday.
Oh, that's great. I'm sure we'll have a lot of questions about that. Okay. All right. Thank you all so much. And we will see you next time.